What is up, everybody? It's BG. I'm back again with another video for you guys today. So overall, hope everyone is having a great weekend. I wanted to hop on here and I actually wanted to make another video to kind of clear up a few things that I feel like I didn't dive into enough throughout the academy. So in this video, I'm going to be talking to you guys about how to identify market structure, these key levels, so you can actually figure out when the best times to enter, will be. And another thing I want to teach is what's going to separate, the top 5% of traders, the top 2% of traders that actually do this for a living. I want to tell you guys what separates them from the rest of the traders that, try and end up failing or end up quitting or just not being able to last, in the game. So, without further ado, let's go ahead and get into the video. I'm right here on AUD/USD. We're on the 4-hour time frame right now, and I just drew out a few zones, and I want you guys to see what's going on with market structure. So, if we look in the past, we can see that price was coming down for a while. We're on a steady, very steady downtrend, and I just wanted to map out this one area of price movement here. And this was price movement over the span. Let's start right here. This was price movement over the span of around 140 days. So you could say that's what, about nearly 5 months or so. So let's start right here. I drew out this support level. We can see this is a key level where, prices showed some reaction. So I'm gonna draw out both these zones. Oh, didn't want to do that. Alright, so first thing I noticed is, we had a steady downtrend here on the 4-hour time frame. Price began to respect our moving average. Eventually, we had a breakout, okay? And then we had a touch of market structure. Now, being we had this touch of market structure, we had definitely a pretty strong downtrend. Now, the thing I noticed here was this trend line started to develop. We had one touch, a second touch, a third touch, okay? And I want you guys to actually see what happened at the start of our trend line here on AUD/USD. So obviously right here, we could draw this zone out. This is a zone where previous price occurred. We have a double a tweezer bottom, which basically shows that we have double wick rejection off of this zone. Now, if we look in the past, we have 1, 2, 3, 4, 5 wicks. Okay, we have 5 wicks. So basically that means 5 different times this market structure was tested and we actually had some form of rejection. So one quick tip for you guys, when you're looking to take an entry on some form of market structure, you can go in the past and you can actually count how many times price is rejected. Me personally, anywhere from 3 to 5 times will be your most high accuracy trades, especially if you're looking, for reversals of trends. As you can see right here, the overall move was down, but we had downward movement to this past key level, especially being we had a double bottom here. Really gave us significant chance for an entry. So, as you guys know, I like to do, we identified we had a W formation, slowdown of market movement in confluence with our double bottom. So what I actually want to do here is I want to get my Fibonacci lines from the bottom to the top. Okay, from the bottom to the top, being we have this key level on market structure right here. We can see previous area where we had about 3 wick rejections, and you can bring it all the way back here, and we had even more reaction with this level. So that was a good area for our pullback to actually occur. So that's all we're doing. We're looking for a slowdown on market structure, and we're looking for a pullback back to our 618 level. And as you can see, our 618 level is perfectly touched. There you have it. Our entry zone, of course, is 786 through the 618, but we do have a perfect touch of our 618. So 618 also being in confluence with this future ascending trend line that was actually be formed. So basically on the lower time frame, let me go to this app here, and I want to show you guys what price movement would actually look like on the lower time frame. So being we had this upper movement combined into this lower movement, this is what price would look like on the 15-minute time frame. On the 15-minute time frame, you would see that it looked like price was overall trending down, and you would probably not want to buy just looking at first glance of market structure. However, you may have a slowdown of momentum, maybe another break until you finally reach that, zone. Because when you're just in the middle of these areas, like let's say we're just talking about this zone right here. Let's just say we're talking about this area here of a strong upward movement. Okay, so if we were to go to the 15-minute time frame, this would probably be what this would look like. We'd have some upward movement, then we'd have a slowdown, then we'd have a break, we'd have a breakout, maybe not a retracement all the way down, and we would just have, slow. You might even have a little movement like that, and then it would go back up. So this is where patience comes into play. So this is what it would look like on our 15-minute, maybe something like this. We'd have an eventual breakout, and then we'd have a slowdown in market structure, being that price is now in our reversal zone. So this is what we'll look for. We look for either a double bottom, W formation with the retracement to our 618, and that will be our entry to catch the continuation, or I'm sorry, the reversal after our pullback, so we can then catch the continuation of this uptrend. Now, if you're a swing trader, you can most definitely, take your entry somewhere around here, stop loss below these lows, and hold this for the long term on this higher time frame. But me personally, being that I'm a day trader, I like to get in and out of markets real fast. However, I will be actually switching up my strategy real soon to trade a little more conservative and a little more for the long term, especially being that I won't have to kind of keep my eyes on the markets for as long. So if you'd have entered here, as you can see, we have a double wick. We have a double wick reversal. So that's a good sign that on that lower time frame, we were showing some type of reversal pattern. So you would have been able to take price all the way up to here. Eventually we had another pullback all the way down to our trend line for a third touch. As you guys know, third touch of a trend line is also an opportunity. We had a few wicks, 1, 2, 3 wicks, which would have definitely been even more confirmation to go ahead and look to buy this pair, especially being that we had to slow down the momentum and we actually have a third touch of our trend line. I'm going to show you guys what's coming next in market structure. Next, we're going to identify this key level up here. We can see that actually in the past we had 1, 2, 3, 4 rejections. Eventually, we have a breakout of our significant zone here. So being that we had this breakout, what I want you guys to see is how market react. So up here we have 1, 2, 3, 4, 5 levels of wick rejection. Like I said, you could have traded against this trend. You could have went for a sell here, especially being that there's 5 wick rejections. Because like I said, guys, I'm focusing on anywhere from 3 to 5 wicks around these zones. Now, you have to be real adaptable to the market. So when the time comes where, you may not see this many wick rejections, you could always throw it in with more confluence, such as your RSI being oversold. Maybe you have a perfect break and retest of a trend line. Maybe you have some fundamental news coming out. You can always fill the gaps, no pun intended, being we talk about trading. You can always fill the gaps of your strategy with other methods as long as you're meeting the confirmation levels that you require. Me personally, I need at least 3 or 4 confirmations. Sometimes I have 5, 6, maybe even 7 when it comes to trade. So as you can see, not to get off topic, but as you can see, we had our full area of wick rejection. This would have been a good opportunity to sell, and then we have a pullback down to market structure. 1, 2, 3, 4, and then eventually we have rejection. So we could also see being our moving average, our EMA, our 80 EMA is a value zone that likes to act as a moving trend line in some cases when market is at a certain standpoint. It is also in confluence with another ascending trend line that we started here, and you can see that you can even draw this out. And you can see that, boom, there's a break, eventual break, retracement, and then boom, we have a continuation. Break this level, we break our level, and then we have consolidation on this zone. around 3 wicks, and then as you can see, another touch of our trend line, moving on up, and then price stops out at this middle level. Not stops out, but comes to a slowdown at this middle level, eventually breaks through to our moving average, and then decides, okay, we're gonna break out, we're gonna collect some buys from most, sells from most traders, and then we're gonna go up, stop them out with about 5 wicks. And as you can see, if you'd have entered on the 5th wick here, that would have been your most accurate trading setup. And as you can see, we have a breakthrough of this level signifying selling pressure, and then we have a breakthrough of the next level signifying selling pressure, and you could have definitely took price down for the long term, as you can see here. So basically what the point I'm trying to get across to you guys is the more levels of market structure that are broken, retested, continued through, that's going to be the more probability and the more clues that the market is giving to you that is going to go in a certain direction. So like I said, I'm not focused on 100% trading with the trend. I'm not focused on 100% trading against the trend. Our whole goal here is to be adaptable and try and trade what the market throws at us. So for example here, I'm going to show you guys what trade against the trend would actually look like. So as you can see, we have market structure, a lot of wicks going against here, eventually have a breakthrough, continuation, and then we have a breakout of our trend line, our ascending trend line here, and we can see that a nice little W pattern was formed. Now the thing I noticed here about this W pattern is it's right below our ascending trend line. So what does that mean? Does that mean maybe we'll get some bullish continuation all the way up to the retest, which would also be in confluence with our moving average as well? So that's kind of how you want to look at the market. So for example, I could take Fibonacci, as you can see, comes down to our reversal zone, which is our 618 to our 786, and boom, there would have been a good buy opportunity right here. If you're swing trading, this should be enough confirmation, even if you bring it in the past. Boom, there we go. Nice little reversal zone there, and you would have definitely been able to take price up for, let's see how many pips, depending on where you entered. Looks like about 50 pips, but on AUD USD that's actually good movement, because AUD USD is definitely not going to move as fast as GBP JPY. So yeah, you could have bought here, got out there, and then potentially entered for the sell once you've seen a retracement of this ascending trend line, and then based off of that retracement and pullback before our downtrend, you could have caught about 80 pips on that, and that would have been a real good sniper entry, because as you can see, price barely went above our ascending trend line. So I want you guys to see, if you look real close at the markets, these levels are everywhere. These levels are literally everywhere. Sometimes you may have to look a little closer than others. However, boom, let's see what happened here. Price was trending up. Let's get our trend line, and then eventually we have a break of our trend line right here, a break, and then a pullback all the way up to our moving average. This could also be considered probably a zone as well. We have a pullback all the way up to our moving average, eventually a touch of our zone once again, and then eventually a breakout, and then we get a retracement. And I'm going to show you guys about this 5 wick strategy once again. We get the pullback, we have 1, 2, 3, 4, and our 5th wick was the most accurate and actually brought us all the way down to 200 pips. So yeah, as you can see, real strong trend to the downside. I can draw a trend line with that and see that we had 1 touch, 2 touch, 3 touch. A touch of our moving average, was also kind of acts as a trend line for us that is movable when price is trending in a certain direction. So basically, when price is consolidating, your moving average may not work the same as it will when it's actually going in a full trend mode. So boom, there's another touch, and these are all opportunities to sell as long as you identified key levels of market structure. This would have been an opportunity to sell because eventually we had a breakout of this zone in confluence with our moving average. So you never want to sell on a trend line blindly, Okay, you're never gonna want to blindly sell on a trend line. Always look in the past and always see, okay, let's, this is what market structure is doing. This is actually why I'm gonna enter. This is what's kind of causing me to enter here. So, like I said, always identify this market structure. Market structures everywhere. It doesn't fail you as long as you know what you're looking at. The more time you spend on the charts, the more you'll definitely kind of get the hang of what I mean by this. The more you train your eye, the better off you'll be when it comes to trade. So let's go ahead and just identify what happened here. Okay, so here's an ascending trend line. Boom, there's a touch. Boom, there's a touch. 3, 4, we didn't have a touch here, and there's a breakout of our ascending trend line. So you want to identify this breakout and see if this breakout was a test of new levels or potentially just the area where price will reverse from. So if we bring it in the past, we can see this is most definitely an area. There's a touch over here, some more right here, another one right here. So this could have just been a buyer trap to trap people that were attempting to go ahead and trade breakouts on this, and we can actually identify what happened here. So we had a breakout, eventually fake, and then we had a small pullback up to our zone, and then a continuation all the way up, all the way down, back to our level. So yeah, you could definitely identify this market structure everywhere. These are all opportunities to enter on lower time frames. The more wicks you see, anywhere from 3 to 5, is usually what I'll be looking at to actually enter. So there's a few right here, there's a few right here, there's a few right here, and you could have entered here for a sell. You could have scalped this, day traded this. That would have been 30 pip opportunity. This would have probably been a 40 pip opportunity. Eventually we have a breakout up here to this zone, and then you could also probably draw a trend line right here, and you can see that there's a breakout of this trend line, signifying eventually this level possibly won't hold up. So basically, when you're looking at a trend, 3 things happen. You have the down movement, you have a pullback, and you have continuation. So when you consistently have pullback, continuation, that shows that price is trending strongly. Okay, that's definitely what that shows. However, the more levels that are taken out, so let's just say we're on a 4-hour time frame and we have like downward movement, and then we have eventually a slowdown, and price breaks this level and goes through that. That shows a slowdown momentum. Price is no longer trending down. It may be consolidating and moving, but the trend slowly comes to a stop. However, it can still, make a continuation to that certain direction, but you definitely want to keep an eye on our market structure here. So, hope you guys enjoyed so far. The next thing I actually want to talk about is what's going to separate the 5, the 3%, the top 2% of traders from that 95%, that 90% that, won't ever trade for a living and, will just break even over time. I'm going to show you guys what you need to be doing to actually get to that higher level where you can trade for a living, and you can stay consistent with it. So basically, guys, first thing I want to say is that your trading strategy is not going to make up how profitable you are. A trading strategy is definitely a key component. How you're entering the markets, how you're getting in and out of these markets are definitely gonna have some sort of result on the trades you're taking, but the outcome of these trades are going to come directly from your risk management, your trading psychology, your patience, and your discipline in the markets. Okay, guys. So the top 5% of traders, the top 2% of traders, they're all very disciplined. They know what they're looking for, and they're only going to enter around these zones. Okay, and maybe not these specific zones. Every trader has different strategies, but me personally, the only time I'm going to enter is, if I see market slow down, I'm going to wait for that breakout. I'm going to wait for a retracement. If no retracement happens, then maybe I won't buy. Okay, so just real important to identify these key levels. I might see 1, 2, 3 wicks, and I'm like, all right, I don't want to have fear of missing out, but at the same time, I don't want to enter this with risk of price going against me. So I'm going to wait for a couple more touches. Then eventually you have that 5th touch, and then price breaks the trend line, and you have a continuation all the way up to the upside. So the most profitable traders are very disciplined. You know, they have patience. They know what to wait for. One of the best tips I can give you guys is don't be in a rush to actually trade for a living, because in order for you to trade for a living, you're going to need a substantial amount of capital, and that really comes from either long-term growth or you saving to actually put in your trading account. So yeah, thing about me when I first started, I realized, you know, I had to identify what my problem was with risking too much. Okay, when I first started trading, I was risking a crazy amount of capital. Like I'm talking like 30, 40, 50% per trade, and I was flipping accounts every now and then, but it wasn't sustainable. So if my trading isn't sustainable, then how would I make a sustainable living? You know, so that's when I decided, okay, I'm gonna need to start working more. I'm gonna need to start saving this money. I'm gonna need to start investing. You know, just overall getting more capital to me, so eventually I could put enough money in that trading account so I can trade for a living based off the percent returns that I'll be getting here. So yeah, most top percent of traders, they're very disciplined. They know exactly what they're looking for. They know what type of market structure they're in. So basically, people say trade with the trend. If you're blindly entering the trend, this is gonna get you every time. So if you're selling into this, if you sell right here, you're gonna get stopped out. You sell right here, you're gonna get stopped out. And the thing is, most traders are entering in these areas where they're gonna get stopped out. They're gonna go a little bit into profits, and then they're gonna get stopped out. You could look in the past, guys. The market moves like this. You know, if you hop in a selling market real quick, sales don't go like this. A selling market is not like that. A selling market is boom, boom. You know, quick, choppy movements down to that direction. So there's a few ways to go about catching these down moves. Is you can enter at the top of the trend, you know, with our reversal formations, or you can enter on these pullbacks, as long as you combine that with some form of previous market structure. You know, you're never going to want to enter on a pullback if you have another zone up here and you're just waiting like, okay, I'm going to enter here, but price can potentially come up here. So most definitely the thing you're going to want to do is identify this market structure. Stay patient, you know, build your strategy. I hope you guys enjoyed the video. That's pretty much all I have. If you have any more requests, make sure to comment them down below, or go ahead and put it in our Telegram group, because this video will be going to YouTube as well as the Trading Academy. I hope you guys enjoyed the video. Leave a like, comment, subscribe, and yeah, guys, that's pretty much it. Hope you guys learned something new from this. If you want to see a full insight to my full trading strategy that me and my students actually use, you can go ahead and hit the link in my bio. You can go ahead and message me on Instagram. I'll give you more information about it whenever I can. And you could also click the link in my bio to my website, which should also be in the description, and you can actually get tapped into the Trading Academy to get even more information in this, because there's tons of free information on YouTube you can find. I'm not going to sit here and tell you guys that you have to buy a course to reach the next level. However, I can honestly say I wish I, you know, invested more into my education when I first started, especially being, you know, I lost over $3,000 trading in my first few months, and that was over like 5 or 6 accounts. And if I'd have just had the right mentor to tell me the correct things, then that would have never happened the way it did, and I would have probably jump started my trading a lot quicker. So yeah, like I said, tons of free information here on YouTube. They got baby pips, but if you want to learn my particular strategy of how I trade for the markets, how I trade for a living, go ahead, hit the link in my bio, hit me with a message. I'll be getting back to you guys whenever I can. Overall, hope you guys enjoyed the video. Stay tuned for the Signal group that should be releasing within the next few months. I'll catch you guys later. Hope you guys have a great rest of your weekend. Peace.